Hey, how's it going, guys? It's VisualTrades. Today we closed at $45.06. Currently in after hours, we're at 42.85, and today is earnings day. And I would like to say that I'm hyped, especially with um, our prediction being half-heartedly hit today. And yeah, it everything played out pretty well. I mean, I know I may not seem excited, but I'll show you guys exactly what I'm talking about. So in today's discussion, um, we're going to be talking about a couple of things. So one, I'll be re-clarifying my prediction, along with showing you new encapsulating fib levels. I'll talk to you about LPSs. We'll also discuss that inverse head and shoulders on the macro scale, which I will get into in a minute. We'll talk about this Inception chart that I created. I think it's right here. Let me zoom out. There we go. I'll discuss that in a minute. We'll also talk about showing comfort at the major neckline, which I will talk about, and to stop worrying about micro movements. So the last time we had talked, we were discussing a potential break of 44.44, at the least close above it by November 9th, which we still have another day to get the other half of the prediction right for testing and rejecting. For the most part, I kind of want to do 48.5. It just makes a little bit more sense for the resistance levels. So I'll keep it on the low end, but just in case we blow through that. Okay, so for the new fib levels, the reason why I wanted to talk about this macro encapsulating Fibonacci retracement is because we've done enough movement over here to where these fib levels are still valid, but now they're acting as support. So we need to find new resistances or much bigger supports to base our next moves off of if we want to get to the next leg of this squeeze play. So I was taking a look at some of the charting and what I was able to see and not see, and I noticed this movement that we did from breaking the 0.618 of this micro. Here we go. I'll zoom in right here. So breaking the 0.618 of this micro retracement in relation to May's run-up had got stopped at the 1 Fibonacci level and retraced above the 0.786. We have the same kind of thing going on right here where we broke the 0.618. We pretty much flew with flying colors for the past 2 days, past our target that I've been talking about for like the past week. And then, as of right, we closed above the 1 retracement level, but the problem with that is the move itself is kind of unsustainable. So you're gonna have some sort of retrace. If you zoom into this, you'll see the magnitude of this retrace and how it hovered above the 0.786 in May. We're doing the same thing, but we're doing it in after hours right now. And I wanted to discuss the validity of after hours and pre-market. When you have institutions who are trading derivatives of the underlying stock back and forth because there are no more shares available, you're going to have unnatural price action in itself because there's no more retail putting as much volume into this in terms of like turnover and transactions as much as it is with institutions, because retail is just buying and holding, so they cannot contribute to the flow of volume. Therefore, that's why you see Wyckoff to like a textbook level, because you have these people who have big feet in the game, moving different kinds of derivatives of this stock back and forth, even if there are or aren't more shares available. I mean, I'm pretty sure there are no shares left, but when you have that flow of institutional movement and they rely on this method, it becomes cookie cutter as to see when your next step is. Because as much as retail owns the float, we only own the float for the reasons being of we're trying to anticipate a short squeeze. But we cannot contribute to the volume if we are buying and holding, because we're parking our shares. We're not moving our shares. So something has to be done for the movement of the stock in the meantime in order to get us to the next level, which is where the institutions step in. Now, I hope that made sense. Volume is different from holding share, because volume is like the transaction of buying and selling a share. That's what volume is. So when you see like 69 million volume on the day, that's the amount of shares moved back and forth, whether it was buying or selling. So if you sell a share, that'd be one of the 69 million volume. If you bought a share from somebody, it would be one of the 69 million. It doesn't matter. It's a transaction. So with that being said, now we get into the macro fib levels. Okay, if you look at the respect of our after hours price right now, which is around 42.91, you can kind of relate it to our run up that we had on May 13th, where the retracement fell right below the 0.618 of the macro retracement, encapsulating this micro retracement. Same thing right here. If let's just say after hours was market open right now, we would be retracing in the exact same spot as seen down here on this white line. So you see where it says post? You can kind of drag your finger across the screen and see that we're pretty much dead in the same spot as the consolidation that we saw on May 13th. So what does this tell me moving forward? Well, not only are we bullish in where we are on this micro fib level, you know, once you get above the 0.618 retracement level, for the history of this stock, it tends not to go back below. You know what I mean? So I don't see much downside moving forward in the short term. In the long term, I would not be surprised to be stuck around this price area within the next week and a half, or you know what I mean, or maybe a week. I'll get into that in a minute. But in terms of an initial run up prior to that sort of consolidation, we would see a violent break of the macro 0.618 level. I mean, violent break off of the macro 0.618 level, which will cause us to kind of consolidate in between this micro 0.786 and 1 fib area right here, before we run up through our 44.4 and our 43.94 macro price, you know, levels. Now, this is where I wanted to get into the top and then the LPSs. So, judging by the structure of this move, I believe that this is was a curated by the dip setup post earnings. One, to shake out retail investors, to make them confused as to why is the stock going down during earnings? Because when you have new retail investors, they don't understand the concept of buy the rumor, sell the news. They do the exact opposite. You know what I'm saying? And I believe that's like a textbook. That should be something that's ingrained in somebody before they start trading. And on top of that, you get into the talk about Wyckoff. You have something called last points of support, where they're basically areas where they're like really essential for you to load up on a position prior to a run. And I feel like these spaces in the stock are being created when they retrace to shake out retail, if it's possible, because I know a lot of people are holding till they die. You know what I mean? Like with you know, like not death. You know what I mean? Like it's just a figure. Fuck. You know what I mean? So with that being said, I would not be surprised that if market opened tomorrow, we see anything as low as above 42 at the lowest. And even if we did see 42, I feel like it would be a quick snapback because you have like 4 points of support right here that you're talking about. We just broke through, and it will make this hard support invalid. Because this is known to be a supply zone for this macro fib level. You can extend this out and you can see the same levels being respected on this side of our phase D Wyckoff. So where does that take us? In terms of a top, I do see still anywhere as low as 48.5, or you could say 47.95 depending on the strength of this, to anywhere as high as our top at 50. It's supposed to be 52.75, I think, but it says 53. It's a little off. Within, you know, hopefully the next coming days, but you know, my prediction said November 9th. So hoping to see some sort of price action like that strong tomorrow in terms of like a swing post earnings. It would not surprise me if we had a weak opening in the morning and then a strong rally to finish off the day to get us to the 48.5 level in terms of price. So what that would look like is this. You would then be talking about moving into our SOS phase, which is why I believe when I mentioned earlier we would see in the next week consolidation above 44.44. It's because that's the LPS that occurs after the SOS phase, which is like us testing this upper trading range between $48 and $52. That would be prior to us ripping, and this is almost like the last lifeboats coming off the Titanic type thing, where it's like, oh, you thought you missed your chance? Haha, well, we'll drop the price for you real quick. Don't worry. Get your fucking positions in. Let's get this shit popping. And this drop is going to shake out a lot of fucking retail. But it's not going to be substantial enough to affect our play. I mean, we have way too much money into this for it to affect the long run. I did talk about the MACD daily. Still looking really strong. I talked about it, I think, a couple days ago. But I did want to talk about this part now. So in case you needed more confirmation bias, I always give credit to Jen Collado for pointing out this pattern. Because I always knew about inverse head and shoulders, but I didn't know it could be like angled in a way. Because then it would kind of make it, I thought it would make it invalid, because then you would be talking about the price action starting to look like a symmetrical triangle, which is a 50-50 chance type of thing. But no, we saw inverse head and shoulders breakout, and I pointed this out a couple of days back, where we did respect this level right here, and we will be seeing further upside if we continue to respect the support of this micro inverse head and shoulders, along with this trend line moving up. And we did exactly that, and I'm proud of this fucking stock. However, this is where I get into my Inception Theory. This right here, my boys and girls, well, I don't know what my demographics are. This is like, to me, the final countdown. To me, not financial advice, but everything looks a little too promising. You know, my options, even on down days, have just been constantly going up and up and up. I'm like, fuck, like they're really going in on this shit. What you have here is a couple of things. I'll start to talk about these inverse head and shoulders patterns. When we talk about fractals, you talk about moves encapsulating each other to create different fib level respects, different fib time zone respects, and different trend line respects. So, you know, when I was looking at this, I was like, holy shit, it's like replicating itself from the inside out. It's fucking insane. So I tried to draw it to the best of my ability, where, you know, this move looks like this move, but both of these moves look like this bigger move. Then I realized, like, okay, well, if this is the big fucking kahuna, what's outside of this? I'm like, oh, there's fucking nothing. Like, hold on. Yeah, no, there's nothing there that's really stopping us except for this neckline. I wanted to talk about, you know, the time that we saw 44. Where was this? I think it was, no. It was right here. I think it was this. Yeah, okay. A couple of days back, we had peaked up at $44, and we descended into a retracement at the 0.618 level. And, you know, that move looked pointless. But then I realized, I'm like, that move wasn't for anything. It was to create the neckline for this macro inverse head and shoulders that we're currently in. And when I saw that shit, I was like, holy fuck. Like, because when you talk about macro and micro moves, macro always takes over micro moves. It's like having a fucking Uno +4 color changing card versus a fucking +2. You know what I mean? My opinion is that once we formed this final shoulder at 44 and we broke above it today, now we're seeing a final retrace down into either respecting the neckline or consolidating above the neckline before we start to see gradual upside. Because at this point, to me, the only resistance that is being generated right now is in these macro movements that are currently above the neckline. Which is why I feel like after 44, 45, that around the area, wraps. Like, you're going to see some violence, hopefully. I even pointed out here the same kind of breaks are in the same regions, where it's like you have these eclipses, you know what I mean, within the inverse head and shoulders, where, you know, it's a little better like this. It's easier to see. Actually, let me do this. There we go. Okay. You got that same little U-shape, break of the neckline. Same little U-shape, break of this neckline. So I'll make this white so that way you can see. Break of this neckline of the pink one. And then this big old cup right here, encapsulating this little cup. Actually, one could argue. Hold on. Trying to see it. This. Yeah, that makes more sense. And then you have this whole U right here with a break of this neckline off of the June high, the all-time high, our September high, and finally our November high. So now that we broke all three of those necklines, I think the only thing now that we have to worry about is fractals forming on a micro scale that's pretty much just delaying the inevitable, and the last points of support that are being formed all throughout maybe this week for final load ups before you start to see a run up. A lot of us have this squeeze play being played out the week of the 22nd, to me, which makes sense because I'm pretty sure a lot of people I actually have a theory on the crypto scene where I feel like a lot of people are trying to get it. A lot of institutions are doing Wyckoff to crypto, Shout out David Marino for pointing something like that out. Prior to Christmas, where we'll see a run up to another fib level. Maybe I'll do a separate video. I don't know, but maybe moving these profits into that prior to the holidays and closing out. Good. It's a good play, especially when you encapsulate our cyclical activities into the same crowd of crypto and meme stocks. It's not surprising as to why there's a subtle correlation between crypto, AMC, and then you got the SPY. You know, all of the shit that resonates with retail is how they're encapsulating us. We are a sector. We're just not listed. You know what I mean? So don't get it fucking twisted. They know that. So, with that being said, my macro target was half hit. I've had this up since the beginning. I've had this up since my channel started. I did make this edit maybe about 3 days ago. It was mostly because I was looking for a consolidation range after the break, but you know, my thesis still remained the same. 50 to 52.75, really high target. Edited it to 48.5. Hope you don't mind. Oops, I'm a shill. Here we go. Just makes more sense. And you know, I guess I'll just end the video on this. Stop worrying about these micro movements, man. When I mean micro movements, I don't mean like on the 45-minute chart, on the hour chart, the 2-hour chart. I'm talking about like on the 1 minute and 5 minute. Like, let me just make something very clear. Think about it like this, right? All things in life, right? When you worry about the little things too much, you do not get a grasp of the bigger picture. It's almost like, I'll put it to you this way, right? Like, you can fail all the classes in the world. You can, you know, you can flunk out of a fucking class, get kicked out the school for 3 days, and get into a fight. You're still gonna fucking graduate. Like, there's just no, you know, there's no workaround for that. Same thing with this. Like, okay, you know, we didn't see the exact break that we wanted to on the 13th, but we're still fucking here. You know what I mean? We're still here. It doesn't invalidate anything. It's just there's different things happening on different days, which is why catalysts could be like the break. Like, there's too much shit going on in the market to be worried about micro movements. You know what I mean? We are literally, from what I see, under a robot's control right now. Like, you can see this shit. Like, that's the only reason why I'm fucking doing these videos. You know what I mean? It's embarrassing to think that the market has gotten to this point, but you know, this is just a byproduct of greed, where people can't live with the fact that people like us, retail, who work their ass off for their money, is finally able to reinvest into something better, and now we're a bigger entity than the top 5 funds combined. It's embarrassing to them. It hurts their ego. So they have to do shit like this. They have to implement robot trading. They have to fucking blast us with algos and Wyckoff to try to scare us off. It's like that one quote in Ants. I think it was Ants. Or I forgot, A Bug's Life. I don't fucking know. Where it was like all those millions of ants that outnumber us like 200 to 1. If they ever found that out, there goes our way of living. You know what I mean? It's right fucking there. I mean, I'd literally been saying since fucking 35, 33, like, don't let people shake you out of your conviction because they don't agree with you. If you did the research and you know, everybody's gonna have a fucking opinion until the results show. You know what I mean? Everybody. And I don't mean to make this emotional, but in terms of Stability with conviction, that's an emotional thing. So it's kind of important to stick with that. Whether you're bullish or bearish, I could be wrong. This shit could fucking drop, get fucking rug pull for all I care. If you feel like your conviction is correct, stick with it then. The results will show based off of the work you put behind it. Do not let anybody sway your conviction. Not even me. I'm just sharing the shit that I have noticed with the stock. This could mean fuck nothing. You know what I mean? So but it has been a wonderful and humbling journey. We've been exposed to such volatility. I can almost guarantee you that even some people working in hedge funds haven't amassed some of the losses that we've seen in our own accounts. They're not used to shit like this. You know what I mean? Like, it's not their forte to be trading in such high volatility without the use of hedging. That's why they're called hedge funds. You know what I mean? You lean towards a bias, but then just in case you incur loss, you are safe on the opposite effect. Us, even though it is free for us to hold, except if you're worried about expiring options, you can just roll. But, for us, this is like a do or die situation. And I'll just end it like this. It also goes into this one quote where it's like, the scariest thing in the world is a man or a woman who has nothing to lose. You know what I mean? This is the kind of situation we're in, where we just don't give a fuck no more. I've literally not cared about the value of money in itself, because I've been able to sustain myself, above means necessary, that I don't find joy in just spending. You know what I mean? I don't find joy in doing random shit with my money. I'm a simple fucking guy. I wear a fucking hoodie with a scarf on. You know what I mean? It's satin. Protects the hair. I look good. I'm just kidding. So because of that, this is a humbling experience, but it is required if you want longevity within this market to be able to do the research yourself. And that's how I'll end the video. I hope you guys have a great day. I don't have any predictions going into tomorrow. I want to see it play out more. I mean, there is a prediction for tomorrow, but it was a macro prediction. I don't have any price movement predictions, but hopefully we do see a test of 48.5. And then within the next week or so, we see some consolidation above 44 prior to us ripping. So stay calm. Everything seems to be going according to plan right now. And respect the fib. So I'm going to catch you guys later, for sure.